What's up everybody, welcome back to the channel. I'm Shawn, GILL CPA with Neutron Tax. Today we're going to be talking about quarterly estimated taxes and how to calculate them. This is something that's important to know if you're a business owner, a 1099 contractor, if you have brokerage accounts, crypto, real estate income, things that aren't W-2 income with withholding. You need to know how to calculate these things and how to pay them and when to pay them. So let's get to the desk and get into this information. Okay, so let's talk about estimated quarterly taxes. So before I get into details on how to calculate this, let me give a little bit of the backstory on what this is and why we do it. So in the US, we have a pay-as-you-go tax system. This means that the IRS wants you to pay taxes as you make your money versus paying them all at the end of the year or all the next year or prepaying them essentially. The issue with this for business owners is that our incomes change, right, month to month. They're not preset unless we're, in a very established business with salaries and all sorts of different things. But for the average person, incomes fluctuate and we don't really know what they're going to be ahead of time. If you're a W-2 employee, the reason you don't have to pay estimated taxes is because your taxes are actually withheld from your paycheck. We've all seen that, right? We have our first job, we think we're gonna make a ton of money. I remember my first job, I think my first paycheck was gonna be like $75. And then I looked at the pay stub and realized that they took taxes out and then I got like $60 or something. That's withholding, right? That's the government saying, we'll take the taxes out ahead of time and your employer sends it off for you. Because the IRS does not trust taxpayers to actually have all that money at once. That's why they want it paying as you go. So for business owners, that's where estimated quarterly taxes come in. That is you essentially every quarter saying, I've made X amount of money, here's kind of a ballpark figure on what the tax might be. IRS, here you go. Right, so you don't end up with like a huge liability at the end of the year. Even if you ignore your estimated quarterly taxes, the IRS actually penalizes you when you do your tax return retrospectively for not paying those on time. So let's get into the IRS quarter system. The IRS's quarters do not line up with what we would call logical quarters, things that make sense, not always the IRS's priority when they're designing these systems. So the first quarter for the IRS is over on April 15th. That's the first quarterly tax deadline. Then it's June 15th, and I know you're probably thinking that's only 2 months later, that's not even 3 months. I know. And then it's September 15th, and then it's January 15th of the next year is the fourth quarter payment for the prior tax year. And if you miss these deadlines, you actually start to accrue interest on the payments you should have made over what you paid in versus what the IRS thinks you should have paid in. That difference, you accrue interest on a quarterly interest rate basis. So what that means is that every quarter the IRS sets a interest rate. It's typically around 3%. And let's say I missed the June 15th payment and I also missed the September 15th payment. My June 15th payment interest starts on that difference as of June 15th and keeps going until the next year. And then the September one starts on September 15th and keeps going until the next year when I would pay this at tax time, the next year. So how do we actually calculate how much estimated quarterly taxes to pay in? There's a couple different rules here. In the best case, perfect world scenario, you would pay in 90% of what you actually owe for the quarter. Now, most people don't do this, and I don't recommend to my clients to try to even bother keeping up with this because you would have to every quarter analyze how much income you actually made, and that's gross revenue minus all the various deductions you may qualify for, apply your tax rate, come out with a ballpark of I think I may owe tax on this amount, blah, 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 and then try to calculate 90% of that. That, as I just said, it's pretty, it's kind of unreasonable. So there's two rules to keep in mind here that everyone should follow. If your AGI is less than $150,000 for last year, You want to go to your tax return, go to page 2 of the Form 1040. You can see a line that says this is your total tax. That's the total tax you had to pay last year. Look at that number and you want to get at least 100% of that paid in for the year. Let's say that tax number in this example was $100,000. If you made under $100,000 in AGI, which is not even possible with that amount of tax, but let's say you did, you would want to pay $100,000 into taxes for the year. Divide $100,000 by 4, that's $25,000 each quarter. If you make a $25,000 federal quarterly estimated tax payment, no penalties. Now let's say in that exact same example, $100,000 in tax, but your AGI last year was over $150,000. You'll want to pay $110,000 in. Okay, that's 110% of $100,000. So you would take $110,000 divided by 4, and that amount is your quarterly federal estimated tax payment that you'll want to make on those 4 dates that I mentioned earlier, which is April 15th, June 15th, September 15th, and then January 15th of the next year. If you do this, no penalties. So this is usually what I recommend to our clients instead of trying to, go through all this effort and work to get it as super accurate as possible, unless that's something that, it makes specific sense for that client to do. For everyone else, I say, pay in as much as it takes to not get penalized, not to have that 3% interest accrue, and then hold your cash, time value of money, right? You want to keep your cash on you. You can use it for different investment ideas, all sorts of different things. You just don't want to give it to the IRS and give them an interest-free loan and have them hold all this money for you. So you can look on the second page of your tax return, see that total tax number and apply those different percentages, and then you can divide those by 4, and those are your quarterly estimated tax payments. Now keep in mind, that's only for your federal taxes. Depending on your state, if it's a state that has state income tax, which is the vast majority of them, I want to say probably 40 of them, 40 out of the 50, you will also owe estimated quarterly tax payments to your state. But same concept, look at how much on your state tax return you paid last year and go for around 100 to 110% based on your AGI and pay that in when you also do your federal payments. And you can make these payments, you can mail them in if you want with a voucher, or you can just do them online. I recommend doing them online. It's much faster, much simpler, and you get a receipt that you can then keep for your tax records and present to your CPA when it's tax time, so that they can account for these estimated payments on your tax return, and then at tax time you will just pay the leftover balance. So that's how you calculate your estimated quarterly tax payments and when you need to calculate your quarterly estimated tax payments and when to pay them. Thank you for watching this video. I will catch you guys in the next one. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.